Let's talk about Bitcoin. Because over the weekend, not only did Bitcoin prices hit a new record high, but Bitcoin hit $80,000 a coin for the first time ever. Why? Because Trump says he wants to make America, quote, the crypto capital of the world. So as soon as he was elected president, we saw Bitcoin prices rally. Since the election, we have seen Bitcoin prices rally by about 18%. And the Coinbase stock has rallied by about 48% just in the last week. Now, why are so many people excited about crypto now that Trump is elected president? Because Trump wants to make cryptocurrency and Bitcoin more accepted in the country, not just from a user perspective, but also from a government perspective, because right now, the SEC does not like cryptocurrency. The SEC categorizes cryptocurrency as a non-security, and the chairman of the SEC, who is currently Gary Gensler, he is very much against crypto, and many people in the crypto industry do not like Gary Gensler. And so many crypto advocates are now hoping that Trump is going to come in, fire the current SEC chairman, and bring in a more pro-crypto SEC chairman, which could increase investment into cryptocurrencies, which could help the values of these cryptocurrencies. So let's break this all down in this video, but I want to start by reminding you that if you are a long-term investor, I don't want you to be investing for election cycles. I want you to be investing for the long term. So if you're investing in the S&P 500 or into long-term ETFs, index funds, mutual funds, the things that are happening with the government shifts don't matter because you're investing for the long term, so you can just ignore all the emotion, all the noise, and all the other excitement stuff. Just continue doing your thing because that's how you build wealth. But let's take a step back and understand how our economy works, because our economy runs on spending. And we measure the spending in our economy through GDP. Now, we think that our spending is people spending money and businesses spending money, but the number one largest spender in our economy is the government. In fact, 30% of our GDP is made up of government spending. So yes, the person who is in the White House can impact how that spending happens and where that spending happens. And that can then impact certain industries and certain companies and certain investments. So if you want to be a little bit more sophisticated and understand these government shifts, those can create unique investment opportunities. But again, those unique investment opportunities are only there for, let's say, a little bit more sophisticated investors who can understand the psychology and understand what's happening, because I would say for the average person, just continue and stick with your long-term investing strategy. But if you do want some more help to understand what is Trump talking about, what are the regulations that he's going to change, and how is this going to impact certain investments and create unique opportunities, that's why I'm hosting a free and live workshop on November 19th at 10:30 a.m. Eastern Standard Time, where the whole focus is how can you profit off of a Trump presidency? How is his presidency going to change how the government spends money? How is that going to impact certain industries? And how is that going to create unique investment opportunities? It's a free workshop for those of you that are already investors and that want to understand how you could potentially capitalize on his investment changes in the White House. So if you'd like to join me on this workshop, it's completely free, and I have the link for you to join down in the description below. Just make sure you register because there's a limited number of seats. And again, it's on November 19th at 10:30 a.m. Eastern Standard Time. So who might replace the SEC chairman that we have now? Now, there's been rumors. We don't know until it actually happens. But one of the people that has been rumored to potentially take on the new SEC chairperson role is a guy by the name of Mark Ueda. And he is a big crypto advocate. And the reason why this matters is because when he does his interviews, he talks about how the SEC needs to end its war against cryptocurrency. Here's what he said in an interview with Fox just last week. Quote, "The commission's war on crypto must end," meaning the SEC needs to be more adoptive and more in favor of cryptocurrency. And then he went on to say, quote, "President Trump and the American electorate have sent a clear message. Starting in 2025, the SEC's role is to carry out that mandate to accept cryptocurrency more as a security in the United States." This is why so many people in America are now getting excited in cryptocurrency because of Trump's views towards cryptocurrencies. Now, that being said, this gets a lot of people excited. I don't want you to make investment decisions based off of emotion. And I'm just going to kind of premise this with my own personal experience here, because I began investing in cryptocurrency a long time ago. I first started buying Bitcoin probably 2016, 2017, back when it was around $3,000 a coin. And I don't recommend what I do to anybody else. I'm just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence. I have made a lot of money with cryptocurrency. I've also sold off a big chunk of Bitcoin. I still own cryptocurrency. But the thing that I want you to understand is with any investment, I don't care if we're talking about cryptocurrency, stocks, real estate, you do not want to make your investment decisions off of emotion. Because when you make your investment decisions off of emotion, that's where the bad decisions get made. That's when you start chasing the wrong investments without understanding what it is that you're buying. Now, I'm not saying don't buy cryptocurrency. I'm not saying you should buy cryptocurrency. What I'm saying is make your investment decisions under a calm mind, not under an emotional mind. And the second thing is understand what it is that you're buying and what is your strategy. Because many people are hoping that they're going to buy some Bitcoin and it's going to 10x overnight. And it's going to make them rich overnight. But that's risky. And when we talk about building your long-term wealth, what I'd like to highlight is the three assets that have built more wealth than anything else over the last century are building a business, stocks, and real estate. These have been time-tested and proven. Cryptocurrency is still a very young asset class. That means it can grow very quickly, but it can also fall very quickly. We have seen crypto prices crash. We have seen crypto prices boom, which means anytime you see a run up, you have this group of people that come in and think, I'm going to get rich buying this asset. I'm going to get rich running it up. And then when it starts to go down a little bit, they panic, they sell, they freak out, and then they say this whole thing is a scam. And so when you think about making your investment decisions, I want you to remember that the people that build the most wealth are those that are long-term investors. It's not the traders. And then understanding the difference between something that's more speculative and something that's more proven. Because the reality is Bitcoin has not proven the test of time. Now, I'm an advocate for cryptocurrency. I'm an advocate for Bitcoin. But the reality is it hasn't been around as long as the stock market. And there's still going to be other hurdles in the future. And we're going to see bumps. We're going to see markets go up. We're going to see markets go down. We're going to see bad things happen. We're going to see scams happen. We're going to see people lose money. And these things are going to be painful. And if you're not willing to accept the risk of that, then you have to understand that it is going to be a risky investment. Investing has risks, right? We've talked about this so many times. But it's even more risky when you're investing in speculative assets. So keep that in mind as you think about where you're going to be investing your money. That's why one of the things I like to talk about is for the average person, just be a long-term investor, invest your money into the markets, let your money do the thing by just letting the markets, ETFs, index funds, mutual funds, build wealth over the long term. It's boring, it's not as exciting, it's not as attractive, but that is the proven method for the vast majority of people. You can have some speculative investments, but understand the speculative investments are speculative. They can go up very quickly. It can be exciting. It can be fun. It can be very emotional, but it can go down just as fast. And if you're not willing to accept that risk, well, you are going to be in a world of hurt. And this is where I want to remind you, again, cryptocurrency is still a speculative asset. Doesn't mean you shouldn't own it, but treat it like that in your investment portfolio. Because the problem that I see happening is you have a lot of people that are living paycheck to paycheck or don't have this wealth yet, and you feel left out of the system. And I get it. This is why so many people have been advocates for cryptocurrencies, because we have seen so much inflation happen over the last, not just 5 years, but many decades. This inflation makes wealthy people wealthier and the average person poorer, because that means their salary doesn't stretch as far. It makes investing more expensive. It makes buying your groceries and your rent more expensive. And so people feel left out. And then comes this new asset class, cryptocurrency, which says we're going to change currency. We're going to change the way that that wealth works, which sounds great. And that is a great thing. But now what happens? Many people then say, I don't invest. I don't have a lot of money left over. I want to see some big returns because that's the only way that I can build wealth. And so then people who have no 401k, no IRA, no stock market investments, no real estate investments, no real other tangible investments, they have a little bit of cash they put aside, and now you want to get the best returns. And then you start to hear people talking about how you can 10x your money through cryptocurrency overnight, how cryptocurrency is going to take over the world, and how it's going to be a guaranteed return because of all these reasons, and it can be very exciting. And this is where people start to make emotional-driven decisions who don't have much of an educational or investment background. People start to make more greed-driven decisions because they're hoping that they're going to get rich very quickly. And that's where a lot of pain can also happen. When people start buying investments, they don't understand, especially when they're buying it with money they can't afford to lose. Because either this is money you need to pay your rent, or because you're borrowing money, you're using margin to buy these investments without understanding the risk. And now you are the one that's taken on all the risk. And we know that cryptocurrency goes up and down rapidly. If you don't believe me, go pull up the Bitcoin chart and look at the last 5 years, look at the last 5 months, and you'll see swings up and down. And if you are not willing to withstand that volatility, you are going to be in a world of hurt. Now, again, hear what I'm saying. I'm not saying you shouldn't buy Bitcoin. I'm not saying you should buy Bitcoin. I'm not saying you should or should not buy cryptocurrency. I'm saying you need to be a financially savvy investor and understand this is a speculative asset. And if it's a speculative asset, it can go up quickly, it can go down quickly. And so if you're investing in speculative assets, make that a piece of your portfolio. Your speculative assets probably should not be the biggest piece of your portfolio. If they are, you're taking on a lot of risk. And so when you build your investment portfolio, understand what's speculative, what's cash flow producing, and what are the different types of more proven assets. That way you can build a strong investment portfolio, because the people that build the most wealth aren't the people that are making the most exciting decisions. It's the people that are doing the boring stuff. Take a look at how Warren Buffett has become one of the wealthiest people in the world. It's not by doing a whole bunch of attractive, sexy things. It's by doing the boring investments patiently. That has been proven through the test of time. Now, again, I hope Bitcoin prices keep rising. I hope cryptocurrency prices keep rising, but there's no guarantees. Speculative assets go up and they go down. Some people are going to make a lot of money. Some people are going to lose a lot of money. And I just want you to be a financially savvy investor and not make your investment decisions based off of emotion. Now, this is not specific for cryptocurrency. I say the exact same thing for gold investors. I own gold too. And anytime you hear worries about inflation, all the gold salespeople will tell you that the dollar is going to collapse, the economy is going to collapse, and you have to own gold. I've been buying gold for many years, and I tell you the same thing. If you want to buy gold, great. Just buy it under a calm emotion. I say the same thing about stocks. People will tell you when markets are rallying, buy stocks now. You have to come in and buy this before you miss the great run. Buy what you can afford and buy it smartly. Stop chasing stocks. Say the same thing with real estate. When real estate prices are running up, people will tell you need to go out and buy a house today before it goes up even more higher. Don't miss this opportunity. I want you to be a financially savvy investor who makes decisions under a calm mind, under financial decisions instead of under emotional decisions, because when you make financial decisions emotionally, they generally don't turn out well. Sometimes they might. Sometimes you might get lucky, but many times they don't. And again, this is where I'm going to go back to what I said in the beginning of this video. I don't want you to invest for election cycles. I want you to be a long-term investor. That is how most people will be able to build wealth. But government shifts will create certain unique investment opportunities. Those opportunities now should be for people that are a little bit more sophisticated. They understand the psychology of investing. They understand how to analyze investments. They understand how to do that type of research. And if that is you, now you can understand how these government shifts, now that Trump is entering the White House, will impact certain industries, how they'll impact certain companies, how they'll impact certain stocks, and how they impact certain investments. Those can create certain unique investment opportunities. But again, that's a little bit more sophisticated. It comes with more risk, but also comes with more upside potential. If that is something that you are okay with, and that's something that you want to learn more about, that's why I'm hosting my free workshop on November 19th at 10:30 a.m. Eastern Standard Time, which you can register for down in the description. But again, for the average long-term investor, none of this stuff matters. And that's where you just got to understand where you are. You got to know yourself, stay calm, and find the investment opportunities that are right for you, that are right for your portfolio, that are right for your risk tolerance, that's right for your experience, and that's right for what you want to do. Because the last thing that I want is for you to say, I'm a long-term investor. And you start making some investments. And then markets start to go down a little bit, and then you start to panic, and then you sell and you freak out, and you go from being an investor to being a trader. I want you to be a financially savvy investor because that's where the real wealth is built. And thank you for bearing with me with the new background because I'm in California for a day or so because I had to do some podcasts out here. And then I'm heading back to Detroit, actually right after this video. So I'll see you on YouTube tomorrow.